If you hold real estate for rental income, you're probably thinking about long term asset protection, tax efficiency, and succession planning. Can you legally and effectively hold rental property through a foundation in Dubai? And does doing so actually benefits you or not? Well, the short answer is yes, but what matters is how you structure it and whether the foundation is serving the right purpose in your broader wealth plan. So, in this video, we are going to cover how a foundation structure combined with rental property ownership works in practice, what benefits it offers, and whether it actually fits your real estate strategy. Before we start, my name is Shiraz Baid and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So, if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. Let's start with what it means to own rental property through a foundation. In Dubai, both DIFC and ADGM offers foundation with a full legal personality. That means foundation itself can become the legal owner of the property. You as the founder do not appear on the title deeds. This separation is at the heart of what makes foundations so useful. And this results in not you being the owner of the property, but actually the foundation will be the owner. This is useful for a few reasons. The first is liability. If your property is held personally or even via a company where you are the shareholder, any legal claim, a tenant dispute, accident, or lawsuit could trace back to you. A foundation acts as a buffer. These assets are ring fenced from your personal exposure. This becomes especially relevant if you're investing at scale or own properties in multiple jurisdictions. The more visible you are, the more vulnerable you may become to litigation. And the second point is privacy. Title deeds in Dubai are not public. And when banks and counterparties conduct due diligence, ownership comes into play. Holding through a foundation simplifies the narrative, especially if you have multiple properties or international structures layered beneath it. Foundations can help present a unified structure when engaging with private banks, real estate agents, or partners. In some cases, investors also use vehicle to separate real estate assets from operational businesses, which creates a clear separation in their balance sheet. The third point is succession planning. If you pass away, a property held in your personal name or even through a company may trigger probate issues, especially across jurisdictions. With a foundation, you can define beneficiaries and distribution rules clearly. It becomes a private, seamless succession plan without needing to rely on foreign bills or fight over assets. The foundation essentially becomes your family's anchor point, avoiding the delays and costs associated with inheritance procedures in multiple countries. Now, let's look at the mechanics. If the property is already in your name, you can transfer it to the foundation. This transfer is legally treated as a sale, and normally that would trigger a 4% Dubai Land Department or DLD fee. However, if the ultimate beneficial owner of the foundation and the property is the same individual or entity, the DLD fees is reduced to 0.125%. So, for example, a property worth 2 million dirhams is transferred to the foundation. The standard 4% fee would be 80,000 dirhams. But with the reduced rate, that drops to just 2,500 dirhams when you are transferring your own property to your own foundation. This reduced fee can make the transition into a foundation structure significantly more efficient, both legally and financially. You will also need NOC from the developer or relevant authority, and in some cases, the valuation report. These formalities may feel administrative, but they serve to reinforce the legitimacy of the right structure. Getting this step right is essential for downstream banking and compliance. If the property is under mortgage, you will need lender approval. This can complicate things as banks are not yet familiar with DIFC or ADGM foundations in as much depth, but it is improving. We have seen several banks allow foundation transfers in recent months, especially when the borrower remains the beneficial party behind the foundation structure. This trend is growing as foundations become more commonly used in succession planning and real estate investment. You might be wondering, how does rental income work? Who declares the income and who pays the taxes? In Dubai, there is no personal income tax or corporate tax in real estate rental income from individuals. However, corporate tax may apply if the foundation operates as a business. The distinction is critical. If your foundation simply holds property and collects passive rent, it's not likely to be deemed as a business activity. One of the cleanest ways to support this classification is by placing an SPV, a special purpose vehicle, under the foundation. This SPV acts as the registered owner of the property and channels rent upwards to the foundation as passive holding entity. It adds an additional layer of clarity when engaging with auditors or banks, especially when the intent is clearly non operational. But if you're buying, selling, or managing multiple properties or offering short term rentals, the line between active business and passive rentals get blurry. It is wise to get local opinion or seek rulings in advance if your activity increases. For international property, say you hold rental flats in London or villas in Bali, the tax treatment depends on the source country. The foundation may be treated as a foreign trust, corporation, or tax transparent entity depending on how it's classified. That's why cross border tax advice is essential. Dubai gives you the structure, but how it's recognized abroad depends on local rules. We have seen different outcomes depending on whether the country in question has a trust friendly legal environment or if it takes a more conservative view on offshore structures. There is also banking. Can the foundation collect rental income directly? Well, yes, in most cases. DIFC and ADGM foundations can open bank accounts with several institutions, especially when working through proper KYC channels. It helps if the foundation has a clear purpose, strong documentation, and an experienced registered agent or administrator. We often pair foundation with a holding company when dealing with a jurisdiction that is slow to accept foundations directly. This hybrid approach keeps the strategy flexible while accommodating the local banking landscape. Some clients choose to layer the structure. For example, the foundation holds shares of an offshore company, which in turn holds the property. This adds complexity but can be beneficial in certain tax or inheritance planning scenarios. The key is to keeping it balanced. Don't over engineer it unless there is a clear benefit. A final point to consider is compliance. Foundations must be properly maintained. That means up to date registers, filings, and in some cases, audited accounts. While there is no public registry of beneficiaries, regulators expect good governance. If structure ever comes under scrutiny by a bank, tax authority, or court, sloppy administration can undermine the entire strategy. So, should you hold rental property through a foundation? If you care about asset protection, succession, and long term flexibility, then the answer is yes. But the structure only works when aligned with your specific needs and jurisdictions. What works for a founder with a single Dubai apartment may not work for a family office holding 15 properties across 4 continents. As with most wealth strategies, simple usually works better than complex. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.